Hello, everybody, and welcome to our latest energy market update. In this update, I'm going to focus on the winter 2024 gas contract, and we can use winter 2024 gas as a proxy for the broader gas and electricity markets. So here's a chart of winter 2024 gas, and there's three things we want to look at on this chart. First of all is the red circle I've drawn at the bottom of the chart here, and I've drawn a red circle here because that's the point in time in February 2024 when the gas price began to rise. And very often in the gas market, in the January to March trading window, is when we get these important longer-term turning points in the market. So there's a distinct possibility that that turning point is an important longer-term turning point in the market. The second thing we want to look at is this dashed orange line here, and I've written resistance line above it, and that resistance line is acting as a temporary ceiling to further price rises. So the rest of this price peak here in early August. That resistance line is basically just 50% of the retracement from this December peak down to the January low. It also corresponds with this important low point here back in June 2023. So that adds extra credibility to the resistance level. And the third thing we want to look at is this turquoise dashed line here, and I've written 38.2% above it because that is the 38.2% Fibonacci retracement level from this February low to this August high. And the reason that we're focusing on that Fibonacci retracement level is because although the price has fallen back in recent weeks, the fact that it is at this Fibonacci retracement level, from a chart perspective, it means that the price is still technically in an uptrend, and there's a distinct possibility that it can bounce higher from this level. The price could even actually fall as low as this 61.8% Fibonacci retracement level, and it would still technically be in an uptrend, and it would still be a distinct risk that it could bounce higher from that point. Okay, so that's the chart analysis. Now let's go and look at the fundamental factors, or some of the fundamental factors driving the market. There's several things we could focus on. I think it's important to focus on the geopolitical risk currently. I'm going to share with you a chart of the Middle East. And we are interested in the risk that Iran may retaliate against Israel for Israel's assassination of a Hamas leader in Tehran. So here's Iran here, where I'm hovering the mouse. It sits on the Persian Gulf, and Israel is over here, where I'm hovering the mouse, on the Mediterranean. So Israel assassinated the leader of Hamas in Tehran, the capital of Iran, and Iran has threatened retaliation. We thought it might happen earlier, but it hasn't happened as yet. And the reason that energy markets are focused on this geopolitical event is that Iran has the potential during any regional conflict to impede energy flows from the Persian Gulf through this narrow Strait of Hormuz here, where I'm hovering the mouse. And we're particularly interested in the gas market in this because this peninsula here is Qatar, and Qatar exports about 20% of global liquefied natural gas through the Strait of Hormuz here. So obviously, if Iran was to impede those flows, that would massively drive energy prices higher, not just in Europe, but globally. The other geopolitical risk that we are interested in comes from Ukraine. So you're possibly aware of the fact that the transit agreement for Russian gas is coming to an end at the end of this year. There's a pipeline running from Russia across Ukraine into Eastern Europe, and that pipeline carries about 6% of Europe's gas. So here's a headline from The Economist magazine referring to this transit pipeline. And I'm suggesting that there's a distinct possibility that Ukraine will not renew the contract. And I say that because the Washington Post, anyway, has suggested that Ukraine blew up the Nord Stream pipeline. So Ukraine showed a certain disregard for European energy security and European energy requirements in doing that. And also Ukraine continues to target Russian oil facilities, despite US concerns that that could spike global oil prices. So I don't think they're going to be too concerned about not renewing this transit agreement, even though it'll impact European energy prices. They'll see it as a way to inhibit Russia in earning money from its energy exports. So that's the two main geopolitical factors I would focus on: the Middle East and the Ukrainian transit agreement. And there's one other thing I think we should look at. We follow closely the commitment of trader reports that come out weekly. And in these commitment of trader reports, we can see that speculative hedge funds have large long positions in European gas currently. So here's a commitment of trader report, the most recent report, and I've highlighted in green there. So you can see that the long positions for these investment funds are over double their short positions. So the long position is the bet on the price rising, short positions are bets on the price falling. And those long positions, they represent over 31% of all the long positions in European gas currently. So these investment funds have large positions in European gas. And we're interested in that because investment funds, hedge funds, etc., are generally seen as the smart money in the market, the people who get in early to any trend. So they're betting on the price, the gas price rising. Okay, so there are some of the major fundamental factors that we're looking at. So what's the advice based on that chart analysis and the fundamental factors? So if we go back to the chart of winter 2024 gas, and we look at the levels that we were talking about there. So the dashed orange line at 115, that's acting as a temporary ceiling, a resistance level to further price gains currently. But if the price were to begin to trade above that dashed orange line, there's every potential the price will get catapulted higher. So if the price begins to trade above that level, that is a definite buy signal. On the downside, our sell signal is at 61.8, or the 61.8% retracement level of this move up from February to August. And that's 61.8% Fibonacci retracement level is at about 87p. So if the price falls below 87p, then technically it's no longer in an uptrend, and there's a distinct possibility that it would fall further. So they're the two major levels that we're monitoring in the market currently. So that's the market update for the moment. If you have any questions, please feel free to drop me a line. All right. Thank you very much.